I'm now convinced Ken Griffen from Citadel is blind.
And you just said that on camera. This going viral.
Ape Nation, thank you for helping me pass 200 subscribers. If you haven't subscribed yet, hopefully I can earn it today.
Good morning, Ape Nation. It is Monday, June 21st, 2021. It is currently about 7 o'clock a.m. Eastern Standard Time. And real quick, I want to touch on something. All weekend, I was reading, researching, watching other people's videos. And I saw a lot of talk about DTCC 2021-002. And the margin calls that everyone is assuming are going to follow this week. So just real quick, and I'm sure you guys already know this, but maybe for some new apes out there. Basically, this proposal means that reporting requirement is now gone, the old monthly one. And the DTCC can now call for your numbers at any time, pretty much. They're thinking about basically doing it on a daily basis. Like if they think you may be holding a lot of, FTDs or IOUs, essentially they can call bullshit if they smell it. That's basically what it gives them the right to do. Now, the fact that this thing has been managed, we went from March 5th to March 27th, and then 45 days later, they're going to plan on implementing it, which lands on today, June 21st. All of it smells fishy to me. The fact that it took this long, and I don't even know if we know exactly that it's getting passed today, but it's supposed to. So, when it comes to margin calls, I want to play you guys a video clip of Ken Griffen from Citadel, the CEO of the hedge fund, talking about the 2008 financial crisis and how they avoided margin calls. Roll the clip.
And not foreseeing the financial crisis of 2008 was the greatest mistake of my career. You see, we are paid to see the unforeseen. And I did not grasp the magnitude and depth of the financial crisis that was growing in our banking system. A crisis so large that virtually every bank in America would have failed if the government had not intervened. Every bank would have failed. And after Lehman failed, we found ourselves fighting for our very survival. We were caught in the maelstrom. We were losing hundreds of millions of dollars a week, if not more. CNBC parked a van in front of Citadel, waiting to break the story of our demise. But we weren't going to give them that story. You see, each day, we took the steps needed to keep our business going. We sold assets. We closed business lines. We let people go. We suspended redemptions. Our management team absorbed $500 million of costs on behalf of our investors to demonstrate our commitment to the business and our belief in the future. And each thing we did bought us one more day. And day by day, we bought ourselves a future. Often the choice was between painful and more painful. But the one thing we didn't do was put things off. By the end of 2008, we had lost half our capital. But we were still in business. And we kept our team. And our team kept fighting to buy us another day. You see, with the right people, with the ability to execute, and with the willingness to make the tough decisions, we were able to save our firm.
Okay, so what did we learn here from this video? Well, a couple things. First of all, they are losing billions of dollars a week. He talked about hundreds of millions. We have brought on a maelstrom of billions of dollars in losses. Like after last week, I don't know what the numbers will be that come out today, but it's got to be over $4 or $5 billion in the last 3 weeks. So we are crushing it compared to '08. We are the maelstrom. As far as him talking about selling his assets, it's very possible that could be semi-true if my computer will load. Ken Griffin sells remaining Fana House condo for $11.2 million. Hedge funders 2 units sold for a combined $46 million, 23% less than he paid in 2015. So it says here that his Miami Beach luxury condo building, he had a 3-bedroom, 4,000 square foot unit that he just sold for $11.2 million. It was on the market for $12.5. Poor Ken. He had to take a 23% cut on profit. And this article is from 2 days ago. So this is newer. This just happened. All right. So getting back to the DTC, the margin calls, we see how they will do anything to stay alive, right? Don't expect them just to hand over or even have the banks thinking about margin calls on anything. They are going to fight this thing to the end, tooth and nail. And you know, the problem is they were dragged into Congress back in February. Ken Griffin went before Brad Sherman, and maybe I'll just play this quick clip, but he really gets chewed out, and you would think they would have just, after this was over, you know what? AMC's at $5 a share and GME is down to $4. Let's just close out all our positions, all our short positions, and let this thing ride out. There's plenty of other companies we can go after. There's plenty of other ways we get money, but no, they couldn't keep their egos in line, and they just said, no, we're not losing this battle. We're going to stay on AMC and keep pounding it with shorts. So just watch this quick thing with Brad Sherman and Ken Griffin. It's pretty good. He gets scolded like a little kid.
In smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomena in economics that channels matter. So, for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, let me reclaiming my time, sir. Who gets the better deal? Well, one that comes from a broker who is being paid for order flow, and one not. Can you testify that on balance there is no difference, assuming the same size of the order?
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked.
All right, so that little clip right there was between California Representative Brad Sherman, and he was basically saying 2 orders come in, one from Robinhood and one from Fidelity. Who gets the better price? And Ken Griffin, as usual, is kicking the can down the road, right? Essentially by rephrasing an answer to a question he hasn't asked. He's basically just prolonging that I don't want to give you a yes or no answer because you don't want to hear what the answer is, truthfully. And I'm under oath in a congressional hearing, so I don't want to purge myself. All right, guys, let's take a quick look at AMC in the pre-market. Right now, we are at 61.40. We're up about 3.5%, $2.14 in pre-market. Take this with a grain of salt. We got about an hour and a half, 2.5 hours before the market opens. So this number I'm sure will change. Guys, I have a video coming out later today. If you made it this far, thank you so much. Thanks to Ape Nation for all the support. And please like and subscribe to the channel. This is Ape Nation. I'm the Massalorian, and I'm out.